transportation, food, housing. These are some of the biggest categories in the Consumer Price Index market basket, one of the measures used to track inflation. And here's how they're weighted. You can see housing, or what the BLS calls shelter, makes up about a third of the market basket, which means it can be a big factor in either driving or tempering inflation.
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen.
But it's also one of the hardest numbers to measure. And as you can see here, it can keep rising even when inflation in other items begins to slow down.
That can make things complicated for the Fed and policymakers if they're trying to push inflation down, as they are right now.
Here's why housing is one of the trickiest items in the basket to measure, and why it holds so much weight in the overall index. When the BLS measures for shelter, it's measuring for the service that a housing unit provides its occupants, or more simply, the cost or value of your home.
You think of how much money you spend every month. A big chunk of that goes to your rent or your mortgage, and that's the case for households across the country. So if it's a big part of your monthly spending, it's going to be a big part of the overall inflation calculation.
The index includes changes in prices for 4 different categories, but these 2 are the most important: rent and something called owner's equivalent rent. Let's look at this one first. On the surface, it's pretty self-explanatory. It tracks prices people pay for rent. While it's less volatile than home prices, measuring for rent poses some challenges for the BLS because it's sticky. That means it changes infrequently, since most prices are locked in place throughout a lease term. But that sticky price means the BLS has to gather data for it differently than it does for other categories. Data for things like food and transportation are gathered every month or 2, but it's only gathered for rent every 6. Sample areas, called panels, report on a staggered schedule, so one might report prices in January and July, while another reports in February and August. That means that changes in rent might not trickle into the BLS's data for months down the line.
What the BLS is trying to do is it's trying to capture both the people who are in the market for a new apartment, who are signing new leases, and the people who are in their existing lease, who are paying the same price they were paying last month. So the BLS is trying to get a picture of the overall market, sort of every renter.
According to a study by the Dallas Fed, changes in the rental market can precede changes in the shelter index by about a year.
You have to wait for enough people to sign new leases or to renew their leases for those price increases to actually show up.
But this isn't even the trickiest part. The other, even bigger slice of the index is called owner's equivalent rent, or OER. This is the price an owner would pay to rent a comparable home. The BLS doesn't factor house prices into the CPI, so they don't show up directly in this. That's because it considers home ownership an investment rather than a consumable good or service, like food or airplane tickets. So instead, the BLS assigns owned homes an equivalent rent based on the average rental prices in the area. It's an estimate. So rental prices can cause a lag, and OER can be somewhat imprecise. And you can see that can make the shelter index look really different from what's actually happening in the housing market. That can make a difference in inflation numbers, because, as you can see here, shelter is taking up an increasing share of the overall CPI. Here's Douglas Holtz-Eakin, former director of the Congressional Budget Office, on the importance of bringing shelter inflation down.
If the Fed wants to hit a 2% target, and shelter inflation's at 6%, everything else has to be 0. That's not going to happen. So the Fed needs to bring down shelter price inflation, and it will increasingly raise rates and tighten financial conditions until it does.
This pressure means the shelter index's lag can make things complicated for Fed officials. We're looking to affect overall inflation month to month.
The last thing they want to see right now is inflation going up. I mean, they've already put in place a number of rate increases. They have more planned. So they're really looking for signs that inflation is coming down. And this is pushing in the opposite direction, even if it's, likely to be temporary.
Fed Governor Christopher Waller said in October that while housing inflation should slow, increases in broader interest rates should help moderate demand and damp inflation in other sectors in the meantime. Though there isn't a specific date that the shelter index could start to cool, economists expect it to start to come down anytime between the end of the year and mid-2023. But it will keep adding to inflation even as the housing market settles down.